Hey folks, so natural gas just isn't letting anyone back in. Is this a lockout? Day chart on the Henry Hub. Let's have a quick look. We've held above the 78.6% Fibonacci and this sort of conglomeration here, this sort of order block high. 2 days in a row now, actually. And after that rollover gap, we still haven't retraced. There's still a danger we might have to pull back. Remember the three key levels on this chart. That's the top of this gap, the bottom of this gap, and then the big, very broad, seriously important number at just around about 2.5. So let's have a look at where that is. The top of the gap is at 2.72. We're currently trading at 2.9, so that's 18 cents below us. The bottom of the gap is at 2.67, so that's 23 cents below us. And we could get all the way back down towards this trend line, the 20-period moving average, the hundreds curling up. And this is the big key level. That's why it's a big pink-orange level, 2.5. So that's where we're at the moment. As long as we're above 2.5, our prognosis remains bullish and long to $3, and then $3, 40, 50, 60, or 75. And that would take us up to the recent swing high at around about here. That took place in November 2023. So quite some time ago when we last reached that price. But look at the broader sort of picture here. Let's zoom out a little bit, maybe switch to the weekly chart. And essentially we've been accumulating in this range around about the sort of just below the average price in the sort of 2s and 3s, well below the 200-period moving average on this weekly chart. But notice one key thing. Look at all the highs, the lower highs as we go along. We've got a lower high there, a lower high, a lower high, a lower high, and can we now change that and make a higher high? We have made a higher low, and this is that squiggly line that we bounced off at 78.6, the now double bottom there, but basically a triple bottom actually, if you include those two and this one. Actually, this is also two, so quadruple bottom, I suppose you could call it, with a little bit of messing around in between. So the sequence of lower lows has been broken, but not the sequence of higher highs. Now, if we do break above this level here, and this is on the futures, at 3.16, we will have actually created a structure break, a market structure break. In other words, the sequence of lower highs will have been changed. Sorry about the jump cut here, I got disturbed. So let me go back to what I was saying. So the sequence of lower highs has not yet been broken, but the sequence of lower lows has now been broken so far. That's not confirmed until we make a new high. But if we do get above this 3.14 level, we will have created a market structure break. Almost, that will be the start of it. We really need to get above these highs here at 3.36 and then the one that we were talking about earlier at about 3.65. The key thing is that although we've broken above the 100-week moving average now, which is a really good sign, notice the last time we did that was a very long time ago, in 2022. And this is the first time we've had a weekly close above the 100-week moving average since then. But look where the 200-week moving average is, and it aligns with all of our resistance that's stacked up above us. Let's zoom back a bit. The last time we got above there was in 2021. So it's a significant resistance level, bearing in mind that the 200 weekly moving average generally goes sideways across the chart because it's a ranged market overall. Nevertheless, we're still on the wrong side of the 200-period moving average, which is slightly elevated due to this peak. So let's take that out of the equation for now and not expect to get above there anytime soon. But it's a good target. I think we could reach up to that sort of level at about 3.8, 3.75, 3.8. A lot depends on the economy, extreme weather environments like we're seeing currently going on right now, and my thoughts go out to everyone down south there who's affected by this terrible weather. So those sorts of things can make a big difference. And of course the elections coming up, which is a big story, and the prospect of extra LNG exports going into next year, and all the supply and demand equations seem to be swinging to the long side, to the bullish side. And so we remain bullish, not only because of the technicals, but also because of the fundamentals. Well, I hope that was a good broad summary of what's going on. Let's zoom back into the day chart as a sort of an outro. And as you can see, we're still holding up there. Looks like we might just be ticking down a bit. Look at those key levels that we talked about earlier in the video, around about the 2.65 sort of levels, and then the very, very key level just above 2.5. I was just about to wrap this video up when I got an email from someone asking me about the euro and about cocoa. So while I'm here, let's just do it and go across to these charts. So here we are in the euro. We're short here. I did cover this in the video yesterday, and this is just more of an update. So we've got this sort of, what's interesting about the euro, this is the 4-hour chart, and generally I'm bearish on the euro and the pound. I think the dollar should recover at least 3 or 4%. I'll show you the dollar index chart shortly. Look at the attempts to rally the euro, making higher highs, but look at the equally vigorous attempts to move down. When I say equally vigorous, I mean the attempts or the pushes down have been much more strong than the pushes up. Sometimes we take 8 or 10 candles to get up and then just one to get down. 5 or 6 or 7 candles to get up, one to get down. 5 or 6 to get up, couple to get down. So the aggression is on the short side, on the bear side, and these sort of futile, febrile attempts, I think I said febrile, I meant feeble, attempts to push up are being thwarted by these dramatic moves down. Now this is all being fueled by the dollar index, and same thing with the pound, by the way. We're short on both of these, but the dollar index is the thing that we're looking at. We're trying to hold this support here. We still haven't made a reversal, but I wouldn't be surprised if we retrace back up to the trend line and the 200 period moving average, bouncing off this very key 100 level parity. We're trying to form a reversal here today. I think we've got a good chance of getting up to about, I don't know, 103.80 to 104, maybe 104.80, back into this blob or underneath this trend line. So that's the euro. For those of you asked by email, there you go, that's it. We're also short on NASDAQ, S&P, fiddling around with a couple of the others. Nvidia is short. I don't know what's going to happen with stocks. The jury's still really, really out on this one. Gold, we've been short, but I've just sort of hedged that now. So I'm a little bit wary of that. We're long on Bitcoin, took some more on those dips down there. We're long on platinum. This is a good one, by the way. If you're trading platinum, I really like this. Quickly, let's open up this chart for you. This is a classic double breakout pullback trade. So there's the first channel, breakout, pullback. Then we form this channel on the top. Both of these are bull flags. Breakout, pullback, and bouncing back up again. Really like that chart on platinum. One of my favorites, actually. Technically beautiful. And then natural gas, well, we just covered all that. We're also long on uranium, both the uranium twins, and we're short on Brent crude. That just continues to just dribble away, despite what's going on in the Middle East. And then we're long on the VIX. We've taken profit on the short US dollar ZAR, ZAR, South African Rand, and I'll be looking to resell into rallies either up to the flat bottom break or the channel line. We've talked about this in multiple videos, including the last one. So there's our entry points up to the flat bottom break or there. And I think that's it. Oh, and cocoa. That's the reason I made this video. This has been a fantastic trade for us. Absolutely brilliant. We sold on the spike back up to this triangle pattern. A little bit early, but just about at the top there. And we had a bit of a faffing around, big spike day on that day. And then yesterday, massive collapse. And as luck would have it, you can only trade one lot of cocoa at the minimum size. That's 1 metric ton. And so I have 1 metric ton short on this very small live trading account, but it's a test account. I'm trying out Pepperstone bit by bit, starting with a small amount. So that could end up like a 50% profit, because I couldn't take a smaller trade size on that. Anyway, that's the way it is. And then a couple of the other commodities, we're out of sugar at the moment. We're still long on soya and wheat, and a couple of these are hedged. I don't know about coffee. I'm still hedged on coffee too. Well, I hope that's been useful. I don't think there's anything else to share. And I did cover what you asked in the video. So that was on the euro and cocoa. I hope you get those trades right. I think they're both going to work out quite well. Take care. Oh, and if you haven't liked and subscribed, that would be as welcome to me as a cup of fresh hot coffee. Take care.
Every hub's a battleground, bulls against the bears. Whispers of a cold front send us into scares. Margins tight, margin calls, nerves they fray. Wondering if I'll see green